even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Boom! Welcome to the morning show, everybody. The best morning show in finance on Stock Market TV. Spencer Israel here. I've got JC Parets. I've got Steve Strazza. We got a lot going on today. As always, we will talk about NVIDIA. Of course, we kind of have to. Had the best day for any stock ever. But it's Friday, which means it's Crypto Fridays. We're talking Bitcoin. We're talking ETH. We're talking all that stuff. So stay tuned for that. Guest today, we got Phil Pearlman on at 9 o'clock. He's from the Pearl Institute. And the Lord, the health Lord of all of our lives. We've got Kimmy Sokoloff at 9:15 and Ian Culley, head of FICC and All-Star Charts at 9:45. That's the plan. Your plan is to sit there, smash the like button, and I see Strazza, I see JC. They know what's up. Let's do it. Run this show. It's Friday, and I'm pumped.
All right. Good morning, fellas.
Happy Crypto Friday, everybody.
Happy Crypto Friday. I love that we do this. I love that this became a thing naturally. Like, it's not like a thing that we made up. Like, we created it. Little love, little bull market t-shirt.
Nice.
How are our cryptos treating us on this fine Friday?
Big nothing burger is really what it is. Not really much going on at all. Bitcoin flat, Ethereum flat, Solana literally flat, up a penny. Nothing. The Doge, Polygon's up 3%. It's probably the biggest mover on the day. So on Crypto Friday, the show's not all about cryptocurrencies, but it's got a little orange tilt to it, doesn't it there, Mr. Strazza?
Orange tilt, yeah.
Little orange tilt. Spencer, can we show the new Crypto Fridays bumper? Is it ready for that? Is it time? It's pretty good. It's pretty good. I said we needed more orange. I guess we got it. Somebody's listening.
I like it. I approve.
And Strazza's a ball buster when it comes to this sort of thing. So Strazza approves. Yeah, you're bougie when it comes to your bumpers. You want them nice, you know.
We both, yeah. It's important. It's important. They're cool. But guys are doing a great job. I like that one.
Shout out Carrie and Brett Schaffer. Happy anniversary. These are friends of the program. Strazza and I don't have enough colors for you guys. All right. So should we head straight to the state of the markets, or Spencer, is there something you wanted to bring up?
No, we can run into it. Yeah, state of the markets. Let's do it. Do I need to run another intro bumper, or can I just bring the charts up?
No, run it. Let's do it right.
I have to run all the intro bumpers. Fine.
Yes. All right, so, since today is Crypto Fridays and these technology stocks continue to do so well, I don't know if you heard, but NVIDIA had the best day in the history of any stock ever yesterday. Is that right? Is that anybody confirm that?
I don't know if it topped that 190 billion from Apple. I don't think it did.
Yes, it did.
It did.
Yes.
Really?
Listen, whether it was the best day in the history. Listen, whether it was the best day in the history of stocks, the other day Microsoft was up 150 billion. Yesterday NVIDIA at one point or another was up 200 billion. I'm not exactly sure where it settled, but at the end of the day, this is a lot of money, right? And I feel like a lot of people are worried about these little banks that have these tiny little market caps and no one's ever heard of disappearing, and then overnight you have these companies adding 150, 200 billion dollars in market cap. Like, why should we be so concerned with these little companies? Clearly, the market is not. So I don't see why we should be. But since it's Crypto Fridays, I do want to talk about the divergence that we're seeing in technology and Bitcoin. We've used Bitcoin as a pretty solid leading indicator, Mr. Strazza. What are you seeing here? Does Bitcoin catch up, or is Bitcoin right and tech's going to catch down, or correlation is just changing And Bitcoin's no longer, and these cryptocurrencies are no longer software stocks, as we like to call them.
Just like the dollar correlations, not enough for me to make that bet right now, right? I'm not going to bet on this correlation breaking up for too long here. I think Bitcoin has a lot of catching up to do. What has it been? 2 months now of lower Bitcoin and higher tech?
Yeah, I mean, since mid-April, here we are, about 6-7 weeks or so, right?
Yeah,
About 6-7 weeks or so.
Listen, the last time we saw a short-term top like this in the Bitcoin chart, I think we have it in the deck here. It was in Q1, and that top looked like it completed, and then it failed miserably and ripped higher. It's slide 14. The topping pattern that everybody's talking about right now looks eerily similar to that, I think.
Yeah, so you think failed breakdown and then you squeeze.
A little failed breaky to spark the next leg. Why not? We see it all the time with Bitcoin, right?
Yeah, you see it a lot of time just in stocks in general, but I feel like because of the volatility and the low liquidity in the middle of the night and things like that, you tend to see it more in cryptocurrencies, right? Wouldn't you agree?
Yeah, definitely.
And let's remember something. These head and shoulders tops or whatever, they are characteristics of reversals, right? These are the types of things you see in major reversals, and asset prices trend. We know that, which is why a lot of these head and shoulders tops ultimately end up being just consolidations within ongoing uptrends, right? And this is what sort of Strazza is alluding to. So what do you think is the big level here? 27? Got to get back above 27, hang on to that, and then rip through 30, 31?
Yeah, you can call 27. It really, there's near-term price memory there, even around 26.6. Yeah.
Let's go to the next chart here, Spencer. The ETH BTC. So this is the flippening chart here. People think that Ethereum is going to surpass the market capitalization of Bitcoin. So Bitcoin right now is 511 billion. Ethereum is 217 billion. So that would put Bitcoin at what? That makes Bitcoin what, like the 8th largest company in the world? Is that what it is? Number.
How big is it now?
511.
It would rank just below.
That'd be top 10, right?
Taiwan Semi, it would be about 11.
Let's see. I'm sorting here by market capitalization. These are all stocks.
It would be the 11th.
It would be the 11th largest. So we got Apple, Microsoft. Apple's at 2.7 trillion, Microsoft 2.4 trillion, Google 1.5, Amazon 1.2, NVIDIA 950 billion, Berkshire's around 700, Meta's at 650, Tesla 574, Taiwan Semi 487. So that would put Bitcoin right after Tesla, making it the 10th largest, right? 10th largest in America.
That's right.
No, because Taiwan Semi's not American. Where is Saudi? How come Saudi Aramco doesn't come up on this list? What's the story with that? What's the
US list? These are US listed stocks.
Got it. So either way, 10th or 11th largest. I personally wouldn't short this chart, right? Would you short this? Would you be short Ethereum, long Bitcoin?
Would I be short Ethereum? No, I don't want to be short any of them. No.
But I'm saying this particular ratio, like, do you think that this is not going to break out? Are you an anti-flippening guy?
I don't care. I own them both. I think they both keep going higher. Which one goes higher at a faster pace?
Yeah, I'm in that camp too. I own them both. I have Ethereum exposure. I have Bitcoin exposure. I wouldn't really put this pairs trade unless I really felt this. I mean, I've never had this pairs trade on, but it's really, really fascinating to see if this ultimately breaks out. And then just the last slide here, Spencer, that I just want to kind of quickly go over is some of the market capitalizations. One that really stood out. I mean, the Dogecoin is sitting right around $10 billion in market capitalization, which if this were a stock, technically, according to the index providers, it would be a large cap stock for the Dogecoin. You think interest rate hikes are done with
let me give you,
like this?
let me give you a sentiment check because this is an important part of the crypto story too, right? We just got a message in the chat. I'm going to read it out loud. This is from NASDAQ Poppy. I love the name. Bitcoin is so boring now. Not buying Bitcoin for a 5% return. Way better opportunities in equities. We're getting there. It's time. A lot of this, and for the whole back half of last year too.
Yeah, but what he's getting at, and you're not wrong, NASDAQ Poppy, which is a hilarious name also, by the way. Shout out to NASDAQ Poppy. Essentially what you're saying, you're right. I'm not disagreeing with any of it. But really what's happening is that the volatility in cryptocurrencies is not as high as the volatility that we're seeing in other asset classes, right?
Yeah.
Right. Have you ever... Right? We're looking for the safe haven status of cryptocurrencies, the less volatile asset class this day and age, which is kind of fascinating, is it not?
Absolutely. And it's important to remember too, everybody capitulated on this space and sentiment soured to the worst probably it's ever been for crypto at the lows. And we've done nothing but go higher since last fall when the FTX fallout and all that stuff went on. So, we held those prior cycle highs. We held where we needed to. And I think for your question on Ethereum versus Bitcoin, if you're a long-term believer of crypto, right, and you think cryptos continue to work their way higher over the long run, you don't want to play that game of Bitcoin versus Ethereum. You want to own both of them. They're very different from what I understand, but unless you're some sort of crypto expert and you know about the fundamentals of Bitcoin and Ethereum, know something that everybody else doesn't know, I think you got to own both of them, right?
I don't necessarily know that I agree with that. I mean, currently we're in a situation where, it's not, one might go up and the other, they're going up together or they're going down together. That's sort of where we're at right now. But I think that if we're in a situation where Ethereum is dramatically outperforming Bitcoin and we're breaking out, Spencer, if you want to throw that up one more time, if we're breaking out of this base and you want to put the trade on, I'm not saying that I'm definitely going to put that trade on, but somebody wants to put that trade on, I don't have a problem with that. I don't think that it needs to be like this, this scenario where you have to be this crypto expert to put this trade on. The trend is the trend. If this was dollar yen and you wouldn't hesitate, or if this was technology relative to the S&P 500, fine. But what if it's
dollar yen? It's nothing like dollar yen. That's not
fine. But if it's breaking out and it's coming out of this nice base and you have a good risk reward to trade the ratio, don't tell me that you wouldn't. You would.
I wouldn't. That's not the game I'm trying to play here. I'm a long-term believer in crypto, and I think it would be a massive mistake to not have exposure to both Bitcoin and Ethereum.
I think you're completely full of shit. I couldn't disagree more.
No.
Go to last chart. Show up the Bitcoin. This is come full circle here. This
Coming
is
from
slide 4.
Owns both of them.
Yes, today. But you're telling me that 6 months from now, 12 months from now, we could have different information and you're not going to do anything about it? That doesn't make sense.
I will always have anchor positions, large anchor positions in both of those. Those are the indexes.
You sound like one of these people that's like, oh, you should always own some gold in your portfolio. You sound like one of those. Yeah, I couldn't disagree more. All right, this is it. This is for me, this is the whole thing. Bitcoin around 29 to 31,000. That's the level, and remember, we draw our trend lines with crayons, not with pencils. So it's like a range area, this 29 to 31,000. You've seen that was support in early 2021, again in the summer of 21, and then we broke last year, and now here we are back to the scene of the crime. Guys, this is what we call polarity, former support turning into resistance. Throw that head and shoulders up again, slide 34 or whatever it is, so you can get a zoomed in look at what's been transpiring in Bitcoin over the last couple of months. It's this topping pattern that you're seeing, but that topping pattern is taking place right at that former support levels, right at those lows from 2021, right where they broke last year. Those are the highs of this topping pattern. So I'm in the camp that this is not that topping pattern. Just go to the Bitcoin chart one last time. I'm in the camp that this is not a topping pattern, that this is just churning. This is what demand absorbing overhead supply looks like. It's messy. It's frustrating. You get comments like NASDAQ Poppy about how boring it is. Yeah, all that is absolutely correct. Now, if we start taking out 31,000 to the upside and we stick that landing, I will have a very irresponsibly long position in Bitcoin, because if we are able to take out those levels, and I'm sitting here today and I think that we do, and I will be a buyer of that breakout, I don't just think we're going back to 65, Strazza. I think
Yeah.
you get that $100 roll and you go all the way to 120 or so. You know, you're looking at, I mean, you guys know me. I'm not one to be like, oh, it's going to triple, it's going to quadruple. Like, that's not my game. I like to have much more conservative targets. But yeah, you're looking at a 3-4 bagger on this one, you know, with a solid risk reward above 31. No?
When JC says he's going to be irresponsibly long something, that is, just so you guys know, it's code for he has high conviction that the trend is now higher. He's got that confirmation. And for you, the level you're saying is 30, 31. I couldn't agree more. Like that's it's go time. Like you say, mortgage the house, do whatever you want to do. Get wildly long. I like it. Yeah.
All right.
I agree
All
with
right,
you.
Spencer, what you think? How did we do? Crypto Fridays. Not bad, huh?
No, not bad at all. Pretty good.
All right. All right.
Pretty good.
I was thinking when Phil comes on, we could play a game, keto or not keto. I just got food delivery. And I was going to show him food and ask him if it's keto or not keto. No, is that too much?
No, that's a great idea. That's a fantastic idea.
You know the answer. It's not that complicated.
For everybody else, this show's not for me. They say.
Got it. Fair enough. See, you're
All right.
learning that you are
All
not
right.
the target audience.
Let's move it along here. We'll go into our earnings spotlight, but it'll mostly just be a
Are we
conversation.
going to talk about Costco? Hopefully,
We're going to. Although I want to start with Marvell because Marvell is same thing as NVIDIA basically, so we can talk about NVIDIA and Marvell together.
Not the comic, the chip maker. Got it.
Marvell Technologies. Sorry, not Marvell. It's not Marvel. Marvell. Marvell, right?
Go to Carvel. Ice cream?
No.
Don't have them anymore.
That's not keto, dude. Come on.
Dude, the ice cream cake from Carvel is ridiculous. Dude.
JC remembers.
It's so good.
Oh, the one with the chocolate in the chocolate chips in the middle.
Oh,
that
it's
one?
so good. It's so good.
Yeah. Okay. All right. Anyway. All right, so to get the calendar up, there we go, and we had Marvell Technologies and Costco are the two we're going to highlight here. Marvell reported last night the EPS beat, the sales beat, and the guidance was good. And then they said the magic words, AI, right? They said AI revenue will double. What did they say? They say AI revenue will double, at least double, in fiscal year 2024, which is the year they're in right now. And so there we go. I mean, it's going to at least double from here. So the stock is up, what, 17%?
Their top line's going to double?
They said AI revenue will double. They did not say their top line will double.
But then the question becomes, how much of their revenue is AI revenue?
Well, the street's thinking a lot this morning.
How much is the stock up?
17%, almost 18.
Yeah.
Well, I mean, this is one that we flagged. You know, semiconductors are showing relative strength, not just in the last couple of days or even couple of weeks, but semiconductors have been a leader. This one was flagged because, again, very simple. We were just talking about Bitcoin, former support turning into resistance. This is the exact opposite. Here we're looking at former resistance turning into support. This is classic polarity, guys. It was a beautiful entry point. If you guys are reading the research at All-Star Charts, this should come as no surprise. But even if you're not, forget All-Star Charts, forget Marvel for a second. The fact that good news is coming in the direction of this stock, when good news, and by good news, I mean higher prices, not actual news. Stock prices for Marvel continue to appreciate. What are all the other semis doing? They're doing the same thing, right? So whether you own it or not, whether you've ever heard of this company or not, just think about it philosophically. Just think about it as an investor. This shouldn't be surprising at all. We're seeing this sort of thing from all of the semiconductors, right? NVIDIA front and center, obviously. Are we going to talk about NVIDIA? 200 billion? Kind of a big deal.
I want to confirm that number.
Dude, it was up like 30% on a $750 billion stock. Do the math. Let's just say it's a lot.
I loved Strazza's thing from yesterday that it's actually cheaper on a forward PE basis now than it was on Wednesday.
Stock is cheaper. It's up 30%.
Forward PE and price to sales ratio.
Oh, by the way, we have the number. So it was $755 billion yesterday. I know that because I looked it up 3 times. And right now it's 940. It's 940. So 185.
So it didn't beat Apple and Amazon, is what I'm saying.
$185 billion, though. You know, this isn't a competition. This is just evidence of risk appetite is really what it is, no?
Yeah, I got a better one for you, JC.
Like you and I, hold on. You and I like to like compare them and, you know, be like pretend that they're in some kind of a competition of who can increase market cap the most on a single day. And like, that's fun, but like, that doesn't actually mean anything, right? Like if it's 185 billion on one day and 30 billion over the next week or whatever, like, you know.
Let me give you something. You want a hot take? I'll give you a hot take. All right.
Give it to me.
NVIDIA passes Amazon in market cap by the end of this year and Google by next year. Amazon, I think that's an easy one. Just these companies are at different points of their growth phase, right?
200. We need another day like yesterday and it overtakes Amazon or gets pretty close to it.
We can all remember a time when Amazon was growing its revenues and earnings at like 100%, 50 to 100%. Okay.
I don't remember.
It was 10, 15 years ago. It's not happening anymore. This is NVIDIA today. So I think they easily catch up. And I'm going to say they catch up to Google too. I'll tell you why. Google, as much as they can make a move here and benefit from AI, they're also the ones being disrupted more than anybody by AI, which is why you got that delayed reaction in the stock recently, right? They were looked at as the AI loser initially. And now people are like, oh, no, they got barred and all this stuff. Maybe they'll get there. And I think they will, but they really have their work cut out for them. NVIDIA is already in the driver's seat. Google's main product, the way they get 100% of their revenue is because they are where everybody goes to search. Now, if you're sitting in boardrooms or at a diner table, everybody's talking about ChatGPT to search. So Google's business very much being disrupted in a big way by AI, and they're going to have to figure that out. So I think NVIDIA passes them too. There you go.
You know, I like your conspiracy theories.
It's not a conspiracy.
It's interesting. It's entertaining, right? It's entertaining for sure for those who find that entertaining. For me,
dude, that's real.
For me, I think they both win.
I think Google wins too. I think they win less.
I think they both win.
They're all these big cap tech names are going to win. It's who's going to win really big and who's just going to win.
These semiconductors seem to be the big winners so far, right? Because also other companies, they got so much other stuff going on, right? That's part of it. So these are more pure plays that are getting impacted directly, while a Microsoft or a Google's got so many other things going on, right? Do I have that right?
Yeah, and really from what I hear, if you want to get specific about it, individual stocks, AMD is really the one who is best positioned to try to catch NVIDIA. If anybody is, AMD maybe has a shot, from what I'm hearing.
And they benefit from cryptocurrencies trading. They benefit from video game stuff. They benefit from AI stuff. So they just seem to keep on winning, no?
Yeah, they seem to have like the second best options for a lot of things that NVIDIA has the best options for. I remember this when I was getting my GPU. Remember how long that took? Like 8 months?
You were being a real pain in the neck about that. You would tell me every day how you couldn't fix your computer.
I was very upset about it. And it took like 8 months to get the GeForce NVIDIA chip that we needed, apparently. And there were no substitutes. Giancarlo was like, no, it's got to be the GeForce. All right.
Supply and demand, baby. What about Costco? Seems like it's flat after pre-market here.
Yeah, so interesting report. Costco's revenue figure came in a little bit light. Their EPS came in light as well, but that does include a one-time non-recurring charge that they said was from discontinuation of charter shipping activities. So if you take away that one-time charge, they actually beat the estimate. But if you include it, they missed the estimate. That was for EPS and for sales. What they say about they gave same-store sales every single month, so that
came in a little light.
Been out. Yeah, I think a little light. Yep.
Did you guys realize that Costco's a $215 billion company?
They should be.
Yeah.
Costco's about the size that NVIDIA was up yesterday, you know.
Stupid headline here. Costco misses revenue estimates as shoppers curb non-essential spending. Listen, if you're trying to, save money, I think a lot of people would go to Costco. Am I wrong?
It's a consumer staple.
What they said was the sales of their big ticket items are down, right?
Okay, so the appliances and stuff, and that is big business for them.
Yep.
Yeah, fine.
Stock's flat.
Okay.
Stock's flat. Chart looks great. Throw up that slide. I think it's slide 3 there. Slide 3 and 4. Just throw them both up, just to give a nice clean look at what we're seeing in Costco. Long-term trend obviously is up. It's the next one. There you go. Long-term trend obviously is up, and then here's a zoomed-in look, right? So just really coiling, how this consolidation resolves. I think we'll be telling, as we know from experience, asset prices trend. So in all likelihood, the resolution should be to the upside. But this to me is probably going to stay messy for a bit. This looks to me, if the volatility is elevated enough, it looks like a pretty good candidate to sell some premium. My suspicion is that the volatility is probably not that elevated. I don't have the chain in front of me right now. I'll wait to chat with Sean. But this is something where I'd be looking to make a bet that it will continue to remain in this range. That's how I look at that.
I want to talk about Pinduoduo, because this is a name that we talked about a lot late last year and early this year. And it hasn't been trending well, and they just had earnings. You got that? You got those numbers, Spencer?
PDD?
If you give me 5 seconds, I'll get them.
Sorry.
It's okay. Yeah,
Pinduoduo, PDD.
The relatively obscure Chinese internet tech stocks. Okay, EPS. Wow, that's a big beat. $1.01 versus a 54-cent estimate. That's pretty large. Sales 5.48 versus $4.53 billion. So they crossed their numbers for last quarter. And then did they give guidance? I'm not seeing any guidance. But wow, that's a big beat.
Throw up chart 2, Spencer. Chart number 2.
So the stock's moving, creeping higher.
13%. Creeping higher is putting it lightly, my friend.
I mean, it's a Chinese internet stock. I want to.
They move. Are you saying that Chinese internet stocks are likely to move?
I want to see 30% on earnings from these guys.
Yeah. I mean, if NVIDIA, you got $1 trillion company moving $200 billion. Moving 25%. This Pinduoduo, this little nothing.
Right.
Pinduoduo, just for those, this is China. It's Chinese internet retail. It's based in Dublin, which is interesting. This is definitely a Chinese stock, though, right?
So their quarterly revenue is $15 billion, though, in US dollars. These guys are big. I mean, they have a big market cap. The market cap's huge on this thing still.
$80 billion in market capitalization. But that's 70 level. That's the one for me. Throw up slide 2, Spencer. It's a little cleaner. There's less going on in the chart. To me, this is former support in 2020. We finally broke down in 2021, right? I mean, when you look at this, the first thing that stands out, it's a huge mess. But that 70 levels is a big one, right? It's been support, it's been resistance, a lot of market memory there. And then what do you know? Pre-market, it's rallying all the way to 68.5. So we're right there. This would be a logical place for a rest for this particular stock, especially after just a monster move. But above 70, I think the squeeze is on there, Strazza.
Yeah, I got chart 12. You could see the 200-day moving average flattening out there. It's just above price now. 71. Yeah. Yep. That could be a nice little bear trap, right? We hook higher there. I do like that. I got stopped out of this one a while back.
Below 70, you leave it alone, right? Above that, let's go. What
Okay.
Pearl Dog coming
Yeah,
through?
9 o'clock. It's time for our featured guest segment. Phil Pearlman of the Pearl Institute and the amazing Prime Cuts Substack is here. Let's get him on the show.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Pearl Dog.
Good morning, gentlemen. This setup is sick, by the way, guys.
Not
This
bad,
is looking
not
great.
bad.
I love the little frame. I love the whole. I love the whole thing. You got Spencer in there giving numbers. I love it. Love the whole thing, buddy.
That's the green room. Did they try to bring you champagne in the green room this morning?
He's like Baba Booey.
Yeah,
Pearl Dog, how long have we been doing this together, you and I, huh? We go way back.
Dude, we go way back. We were doing Friday afternoon charts. What was it called? Friday charts with JC or something like that?
I think it
we were
was
doing that.
Fridays with All-Star Charts. What was it? Something like that. Me and Pearlman used to do YouTube videos like on like Google Chats. It was ghetto, but it made it work. That was 10 years ago. More.
It was more than 10 years ago.
Yeah.
It was over 10 years ago. It was closer to 15. It was probably 12, 13 years.
Pearlman
But how
and I
great
were
was
both
that? We had
heavier.
no idea what we were doing. What's that?
We were both heavier.
We were both significantly heavier. I was
Yes,
significantly heavier.
Uh-huh.
I was significantly heavier. Exactly.
All right. So I really appreciate the fact that before you came on, you wanted us to put up a chart of Bitcoin overlaid with NVIDIA. All right.
Yes, I do.
All right,
I do, because I've been saying for a while now that crypto. So here's what happens when something is a winner for a long time and it becomes a loser. People hang on to the loser, right? Hey, I had great experience with this. I don't want to give it up. They get stuck to it. They don't want to realize the loss or whatever. And so right now, what's happening with crypto is that crypto is getting AI'd like crazy. And there's no better example of this than we just saw. We talked about this last week on Trends with Friends, JC, but there's no better example of this than looking at what happened this week with NVIDIA and comparing it to Bitcoin. So we take a look at a chart over the last year or 2 years or 5 years even, and NVIDIA is outperforming Bitcoin like crazy. And so it's out with the old, in with the new. So look at that, especially in the last, what is that? 8 months, 6, 8 months.
Yeah.
You see what's going on there. You see it even just recently, very beautifully. Bitcoin's turning down a little bit while NVIDIA is just catapulting.
So
and
Phil,
so
yeah.
what this, my instinct here from a psychological perspective is that whenever you're early on in a trend, you feel like it's late. Oh, I already missed it. Oh, it's already gone up so much. And that we always say those things when we see a trend happening. And so if this AI thing is for real, and I have no idea, you guys understand it better than me, but if it is for real, this is just a very early in the trend. And if we're seeing this kind of action from NVIDIA, then we have to look around and say, well, what else is going on here? And at the same time,
to quote the great Phil Pearlman, you said you guys know a lot more about this than I do. To quote the great philosopher, Dr. Phil Pearlman, bro, there's like 4 guys in a room somewhere that know what's going on.
Yeah.
Right. And one of them is anonymous, and we'll never know who,
Right. And
Toshi,
we're not
we don't
any
even know
of
who
those
he is.
people.
He might be dead.
We're not any of those people. So we just have to be dumb and ignorant and focus on price, right? Because that's the one thing we know that's not going to lie to us. Right?
Here's what
That's why I love what you do. You guys are price behaviorists in the tradition of, Pavlov, Skinner. You're behaviorists. You look at the behavior of the market as a reflection of the collective investor. It's beautiful.
Yeah, because we know, Pearlman, we have the data. Asset prices trend. We know. Like, it's not like, maybe asset prices trend or JC thinks that asset prices trend. We have actual hard data. Asset prices trend. Momentum is real. Like, momentum is actually a thing that actually exists. These are real things. We know that volatility mean reverts. We know that. So, and I'm so happy that you're here because human beings, right? Human beings know that too. Like, it's not like this like secret that only JC knows. Everybody knows, but humans are always fighting trends, right? They're always picking tops, picking bottoms, rather than betting that the trend is going to continue. Yet when volatility is elevated, they think volatility is going to go up forever. And when volatility is down, they think volatility is going to stay down forever. But we know that volatility mean reverts. We know that asset prices trend. Humans, when they act, they do the exact opposite.
Yeah, just to go one step further and get crazy shrinkological on you. You have out here reality, right? You have what's happening. You have price. You have what's ever happening fundamentally with AI or whatever else it is. Then back here, you have your perception, right? And our perception's good. Our eyes work, our ears work, all of those faculties exist. But then in the middle, between what's happening out here and our perception, we have this box, we have this brain box. And the brain box is filled with 2 things that really get in our way. One, our biases and our, the things that we come into it with, our predilections that happened way before
What are predilections?
today. And
What's
then
a
we have emotions.
Hold on, what's a predilection?
Emotions just spin us around. So those two things get in the way of our pure perception and the outside reality. So you gotta get rid of that somehow. The way you guys do it is you just, price is king. Like that's all there is to it.
What does predilection mean?
Like what you think beforehand. Like you come into any situation with all of these experiences, with all of these opinions that you already hold, and those get in your way of just seeing what's reality.
And there's nothing we could do about that because, like, for example, if Strazza tells me to look at this pot stock right now, hypothetically, he's not, but let's say he did. He's like, oh, JC, look at this Kronos or whatever garbage, Tilray or whatever. I'm going to go into that chart already with this perception like, oh, this thing's such a piece of shit. Like, I'm already going to go in there. And I do this professionally, and you're giving me kudos for being open-minded and not having this like preconceived notion. And if Strazza tells me to look up a pot stock, I'm already going to go in there and be like, oh, this thing's going to be disgusting looking, right?
Yes, but your predilection is that you are going to defer to price.
Well, yeah.
And that
so you don't think it's a
very
bad
powerful
thing. So you're saying it's not that the end of the world that I'm going in there already like, oh, here we go, right?
Well, which one in the hierarchy of your beliefs, which one takes priority? And deferring to price takes priority over, oh, these garbage pot stocks that have been going down forever.
Yeah, I mean, I might be like, well, there's a little bit of a bullish divergence in momentum. Maybe there's some support, like, but I'm going to be like, like I'm still going to be a little bit hesitant. But that's probably because the asset prices have been trending lower, and in all likelihood they will continue versus completely reversing. So at the end of the day, my disgust for them comes due to the fact that it's in a downtrend, right? So I guess there's nothing wrong with that.
There may come a day when the pot stocks have a nice round bottom, and you'll see it, and you'll be like, pearls, don't look now, but pot looks like it's bottoming, and you'll show the chart, and people will just hate what you're saying. You'll get no end. You'll put the chart up on Twitter. People will be just like laughing at you and mocking at you. And you'll know you're onto something.
Yeah. Phil, what is it exactly? What is it that's in us humans that makes so many of us just hate the beginning or the early stages of new bull markets? Like why does this happen? Because you're seeing it like crazy these days.
The social scientists call it all kinds of different things, right? They call it bias. They call it recency effect. They call it anchoring, whatever. But really, we're just simple animals. So we look at something and we see that something's happening, and then we don't understand the world that well. So we take whatever we saw that we kind of understood and we just put it on everything else. And then the other thing about that is that we have these feelings associated with those things. And those feelings, we don't know how to process. So they bend our antenna. So we look at something new and we go, oh, that's just something that I looked at 3 months ago. And I'm just making that connection, even if it's not valid at all. So we have these negative emotions with pot stocks forever.
Yeah.
We can't get over that. We can't just go, oh, I'm just going to erase like a chalkboard. I'm just going to erase those negative emotions. We can't get rid of them.
Well, you said something interesting. Like you said, it's something new. Like when I think about this, I'm no behavioral expert, but for me, it really just comes down to like difficulty accepting change, right? Like if you're the average investor, the mainstream media just told you it was a bear market, in early mid 2022. And then you got guys like JC and I out here in the summer telling you stocks bottomed and it's a new bull market. Is it just like too much, too fast? Wait, I thought it was a bear market. I'm not ready for a new bull market. And it takes time for those people to get on board.
They owned all these garbage growth stocks and they got slaughtered.
I want to talk about
Pearlman. No, so I'm asking Pearlman, is it a recency bias? Is it that
Here's what it is. This is
they touched
really,
the stove too many times.
You guys are opening up a whole nother can of worms. So I'm just going to go there. So here's the thing. The world is always changing like crazy, right? Like we're spinning at like 60,000 miles an hour on this freaking giant rock. And that rock is not only spinning, but it's circling the sun. And the sun is actually flying through the Milky Way galaxy, and the galaxy is speeding through the universe. So
Speaking of
everything's
pot, I don't think I
changing.
smoked enough pot for this conversation.
Right. Everything is changing every moment like crazy. But as humans, we have this desire not to let everything, we don't want anything to change. We want to hold, hey, everything's okay. We just want to keep it just like it is. So there's this natural tension in our experience of the world between this desire that we have to keep everything status quo. There's even a name for that, status quo bias. Keep everything as it is.
Right. Comfortable.
As we live, comfortable, don't rock the boat. Meanwhile, the world is spinning, out of control, entropy. World is changing every second. So if you just embrace that change and just go, okay, you know what? The status quo, fuck it, because things are never going to stay the same. And you just give into that and say, hey, everything's changing. Then you have a lot, then you can look at a rounding bottom on a pot stocks eventually and go, wow, look what's happening here. These guys have been going down so long. They're looking up at the floor, but this is, this looks like it could be a bottom. Like you were doing, you were just doing that with small caps the other day. Yeah. JC, you were like, small caps are behaving so poorly. And all of a sudden you're like, hey, so you have that ability to change and to go.
Okay, but what about you?
That.
So I'm asking you the other day, we're on the phone and I'm telling you how I'm using AI every day personally, less personally and more for business, but I'm using it. And you're not embracing that change. You are not using AI. So here we are talking about recognizing the world that's changing and the status quo. Meanwhile, here's Pearl Dogs being like, nah, JC, I don't need no AI. I got my natural intelligence.
Does it come down to the phone? You don't want the phones in people's hands, Phil. And
no. Here's the thing. I love AI and I'll be happy to use it. But right now I'm in entrepreneurial mode and I'm working on very, very specific things. And I'm honing my craft, working with people, helping them make better decisions, helping them get healthy. We're working on launching a podcast together. And I have all of these different initiatives happening. So it's just a bandwidth thing. It's just me saying, okay, right now, I just don't have that focus. I'm going to spend energy and time with my family, energy and time staying healthy, energy and time on my business.
I don't know if
I'm not ready to learn a whole new thing.
I think Pearlman needs a little session with Danny Jassy.
Listen,
think is what
it's not a trend I want to miss. I'm in the same boat as you, Phil. It's like, where do we have the time? But this is only going to make it so that I have a less full schedule. I'm hoping, right, and actually clear
schedule a meeting with Danny.
Google came in way after Alta Vista and all of these other search engines. And they came to dominate the system. Yep. So while I recognize this is a trend and I love it and I will embrace it as an investor, there's going to come a time where I'm going to jump into it and I'm going to know what tools, I'm going to get the assistance, probably hire somebody to help me.
Let everybody
else be when I do it. But right now,
are you saying that ChatGPT is BlackBerry? Is that what you're saying?
Could be. We have no idea. I mean, remember when ChatGPT first comes out, Google gets killed. Now what's happening?
Two more for Phil before we let him go, Spencer. First
of
all,
total carnivore. Rick Wamps eat animal protein.
I was wondering if you were going to see that comment.
Little broccoli maybe on the side. There's nothing wrong with it.
When I think about,
but mostly eggs, chicken, fish. Hell yeah.
What about avocados? Is there
avocados are fantastic?
Can we eat too many avocados? Too many avocados or never too many?
All right. There's never too many avocados, never too much beef, never too much eggs, never too much garlic. Go ahead, Strazza.
Why is it so? I'm just going to do one now because it's so hard to get a fucking word in on these interviews.
We have Kimmy here. Hurry up.
Sure.
So why is it so hard for people to be healthy? Like, why is it so hard for me to just do keto consistently? Like, why don't we care more about ourselves?
Some people do care more about themselves, but there's two huge factors to that. One of them, sadly, is cultural. So we are products of our culture to a degree.
Yeah.
And we live in a culture that is toxic all the way down. And so in order to be healthy in this world that we're living in the United States in 2023, you have to be subversive. You have to be a contrarian, and you have to go against all of the commercials that you see on TV, all of the huge bread baskets that they put on your table when you go to the restaurant, all of those types of things, the subtle cues and the not so subtle cues. You have to just walk your own path. That's one. Number two is that the foods that are put in front of us are addictive or hyperpalatable. They're made in a laboratory. So, everything Pepsi makes, everything Hershey, all these stocks that are making all-time highs, Hershey, Pepsi, Mondelez, McDonald's, all of those are Frankenstein foods that are concocted to be addictive.
Yeah. And they're good at it. They're real good at it.
Dude, they're geniuses.
They're great. We got to hop. Phil Pearlman is the author of a great Substack. It's called Prime Cuts. I dropped the link in the chat. It's also in the description. Check it out. Phil, thanks a lot, man.
Love you, Pearls.
Adios, fellas. Have an incredible afternoon.
Pearlman's buying small caps.
Okay, he didn't say that. All right, Kimmy Sokoloff is.
He told me he's buying small caps.
Okay, Kimmy Sokoloff is here. Let's get him on the show right now.
Kimmy,
What's up, guys?
Kimmy,
what an intro!
Kimmy,
what an intro.
if I had my soundboard, I would give like a round of applause yesterday for yesterday, but I don't have it plugged. I don't have it yet, but great job.
Let me tell you. Let me say one thing. I love sugar. I'm a sugar addict.
So do we all.
Kimmy, nice trade on the NVIDIA. Listen, we came in yesterday. For those of you who weren't in the show yesterday, you missed a great show, first of all. Todd Stone was our guest, and Kimmy in as always. And NVIDIA was gapping up like almost 30%. And I know I've been watching Kimmy trade for quite some time, and I'm like, Kimmy's going to be trying to short this, and there's going to be a big move. And I'm like, Kimmy, you're looking for a few points. She's like, I'm looking for 25, 30 points. Walk us through that trade. And then we'll get into today.
Well, I actually put it on. I didn't want to say, and I told the room I put it on the night before. I put it on at 387 the night before, and I didn't alert the room because it's very aggressive. So in the morning, I said, hey, guys, I didn't need to tell you guys. I had to tell the room, the special people. And I said, guys, I did short it. I told them 3 minutes before at 387, I'm short NVIDIA. There is risk. It breaks above 400. It's a very aggressive trade. I'm looking for 367 on it. I'm looking for 20 points. And well, that's what I did. One gentleman in the room did take it. Maybe a couple of people did take it. It was very aggressive. Some people might stay out of it. And it's very hard to recommend that type of short.
How quickly did those 20 points get hit? Pretty fast,
It was pretty fast. It was in the first, you saw the dip right away. It was in probably the first 10 minutes, 15 minutes.
Wait,
and then it came back. And you saw that strength. So you had that one opportunity, first thing, fade the pop.
Yeah.
And then,
Yeah, I mean, I could see what time I covered, what time I had my order in, and I got filled below it. I actually bought to cover 938 in 55 seconds at 366.81. I guess it blew through it, and my cover was at 367.
Okay, so real fast, you sorted this thing in the after-hours session on Wednesday, correct?
Correct. And I lured the room because it was still up. It was at 390 in the morning, 388 when we were speaking. It was 388. I said, guys, I am shorted. There's certain things where listen, everybody has their own risk. Everybody, they have to push the button for themselves. And it was a very high risky trade. I'm not a financial advisor. I'm a trader, and everybody has to know their own risk.
and you said if it gets to 400, I'm gone, and it got to 399.50.
I was staying with the trade.
Okay.
And by the way, I said she was going to be right on the trade, and I was right that she was right. So I'm going to steal all the credit for myself on the whole thing now.
Now I'm going to watch AMD too. It's getting very extended too.
So AMD, what about Marvell popping this morning? We were just showing that.
Yeah, all this chat GBT stuff, all the Marvell's going. Marvell was looking great. A gentleman in the room called it out. I was like, yeah, it's a great buying opportunity. I mean, this was like last week. It's doing
Micron
well.
also.
Yeah, what are they? Are they all popping up from this? Baidu's looking good too. I'm watching this one on the long side. We'll see. Sometimes they get sloppy. AMD, we'll see. I'm going to see how it handles the 125 area. I might do a counter trend trade short. Clackety Clack was moving crazy yesterday. I'm watching that one too. When these names get extended, I sometimes come in,
Yeah, because you're going to get big moves. What about this market? So up again this morning. Are you going? You're going with it. You're going with the trend here. Looking to short term some of these semis, but just generally speaking, you buying anything?
I'm looking at Cisco. Cisco's been holding up. Listen, it had a nice drop, a nice big move yesterday. It still's got to break this like 410 area, 420, and then I'm looking for a potential move up to 50. It's stuck in this channel, little consolidation. So we'll see if it breaks out.
But you got that gap from April in Cisco, right? That's what you're looking at.
Yeah, right. But all these days, look at the comeback yesterday. Big move. So we'll see. We'll see.
Cisco holding up well. Said no one ever. Said no one no one this millennium.
Yeah, exactly right.
All right, Kimmy, we'll let you go to your room. Kimmy,
I want to say happy Memorial Day, and
same to you.
And thank you to all the veterans.
Yes, of course.
Shout out, Kimmy.
They're calling you a tiger in the chat, Kimmy. I think you're more of a gangster.
I'm a New Yorker.
Right, she's a New Yorker.
Same
Careful
thing
with her.
Bye, guys.
All right. Kimmy is live trading the open every single day. If you want to get into her room, it is a premium service. So the best thing to do for you, if you want to get in, is email us at the email that's on the screen right now. questions@stockmarketmedia.com. Email us, put like Kimmy in the subject so I know what you're talking about, and then we'll tell you how you can get into her room. But it is there every day. It is premium and it is great.
She's a boss. She's a boss.
Told
you she was going to be right on that trade, Strazza. I knew it. I
didn't tell you that you guys maybe wouldn't be right. She said not for me. Not for me.
Fair enough.
Did we get to all of the crypto charts? I know there was a lot in there. Did we cover?
We're never going to get to all the crypto charts. Just one more if you want to throw in the Bollinger Band one, just to show volatility really contracting. I think it was a NASDAQ Poppy talking about the fact that cryptocurrencies are boring and Bitcoin is boring. You nailed it, NASDAQ Poppy. Yes, and the data actually confirms just how boring it is. This is the Bollinger Band width. So is Bollinger Bands, it's a 21-day exponential moving average, and what is it, 1.5 standard deviations above and below? Is that what it is?
2
standard deviations above and below. And when the Bollinger Bands are contracting, that is, volatility contracting, and then Bollinger Bands expand when volatility expands. What do we know? We know that volatility mean reverts. So with volatility really contracting at this point, we're looking for an expansion in those bands, an expansion in volatility, and that can come with lower prices or higher prices, by the way, to be clear. Doesn't necessarily mean it's going to go in one direction or another, just that volatility is going to increase. So that's what I'm looking at. Yes, in fact, NASDAQ Poppy, you're absolutely right. It is as boring as boring gets. But historically, when it gets this boring, it's about to not be as boring. So look out for some fireworks maybe this weekend. How'd I do? Not bad?
I like it.
We've done a pretty bad job this week of taking questions from the chat. So
yeah, I was just thinking that. We're getting some Oxy charts here. What about Oxy, Poppy?
Uncle Warren keeps buying. That's what's going on.
Poppy wants to know, JC, do you still own it? That's what he asked.
I own it personally, yes. I own a little bit. Nothing spectacular. I don't have a huge energy position. I would like to have a bigger energy position. There just hasn't really seemed to be a reason to, right? Yep. But against this 58, this is where Warren Buffett keeps buying. This is the Buffett zone, if you will. Fonz, if you want to throw that up, this is where Uncle Warren keeps buying every time it dips below 60. If you have the one with the little circles of every time he buys, or if you have the sheet, that'd be great. Here you go. Those little circles are every time Berkshire Hathaway has been buying Occidental Petroleum. Every time it dips below 60, he's in there buying. So I want to see this thing ultimately breaking out. This is a heck of a consolidation over the last 18 months or so. We start to break out above the mid 60s. I think we can get a ripper towards 87 and then beyond into the 130s. I think that's ultimately where we're going. I clearly Uncle Warren thinks the same. So I'm keeping a very, very close eye on this at these levels. And
yeah, and it seems like there's a lot of questions about Oxy, guys. If you're interested in Occidental, I don't think anybody has talked more about Oxy stock over the trailing year than we have. We do that on our show at 1 o'clock today, where we talk about all the insider transactions.
I want to throw in the oil chart just to kind of give you guys some perspective.
If XLE's below 78, I don't want to own Oxy. I really don't want to own any of them. That's the problem. And we're just barely hanging on.
Look at slide 2 there, Spencer. Throw that up there quick.
I want to show the relative trends. Can we get the relative trends in here, Fonz?
You know, look at oil. Those are the 2018 highs. We're really flirting with these levels right now. It's really messy. You know, you want to see oil holding above the low 70s. Here we are right around 73. So that's about right. You know, if they can start catching a bid, if there's going to be a bid in oil and these energy stocks are going to get going, it's going to come from right here. It's going to come from right here. This looks like interest rates, Strazza. This looks exactly like the U.S. 10-year yield.
Do we have Ian on the show today? Because we have a good conversation that we could have with Ian.
We sure do.
Oh, Ian Culley, head of FICC at All-Star.
I'm not done with this yet. Throw up chart 6 quickly. Here's the problem for me. You know, I owned Oxy since 2020. I've been out since last summer. I think these are the relative trends. We like to own leaders. We like to own stocks that are outperforming not just their peer group, so that would be XLE or energy for Oxy, but the broader market. And that was Oxy for 2 years, consistently outperforming. These charts were moving up and to the right. Now these are massive tops. It looks strikingly similar to the absolute trend, right? If you go back to one of the absolute price charts. So if these tops start to go on relative or absolute terms, you cannot own Oxy, even if Uncle Warren does, because you're not going to find out when he sells until long after.
We start losing, that is true. If we start losing 58 or something like that, you know, then we could start being like, okay, there's no reason to own it. I don't own anything meaningful, but I do have some. On a relative basis, I mean, at the end of the day, what we're looking at, Oxy relative to the S&P 500 is an energy stocks versus tech stocks sort of situation here is really what you're looking at. So we're down near 52-week lows in energy relative to technology. So that's what I'd be looking at. That's what you're describing there, Strazza. You know, energy underperforming. It's because it's not a tech stock. It's not growth, and it's really growth that's been leading. So I'm curious to see with this interest rates moving lately, if that's going to finally be able to give some of these more value-oriented areas a bid, things like industrials, things like energy, things like financials, maybe emerging markets, right? That's what I'm looking at.
Rates were almost up for 8 straight days, and the groups that are supposed to benefit from higher rates didn't move at all. In fact, they were moving lower a lot of times during that streak. So, you know, I don't love it. But what I will say is the broader market looks great, and I'm not going to sit here and make the bet that tech and the NASDAQ and even the S&P are going to take off and resolve higher from these bases and enjoy a nice leg higher if the rest of the market, if all the value groups are not at least participating a little bit. So I do think, you know, if you look at the broader market and you consider the intermarket implications of all of the bullish developments, I am erring in the direction that things like XLE or Oxy here do make a save and start working higher. I just don't know if those are going to be the leadership groups. In fact, all of the evidence that we're seeing in relative trends is suggesting to us that they won't be leadership groups.
Spencer, throw up slide 2 quickly.
This conversation is good for Ian. Let's move on from commodities.
Hold on, one more chart before we bring in Ian. Here it is. This is it. This is energy versus tech. This is what we've been seeing. So we saw a monster rip off the lows. You remember energy really ripping off those lows. Technology stocks were getting slaughtered as interest rates were going up. Financials, energy really leading the way. So the question becomes, is this a massive top and unwind of what we saw off the 2020 lows, or are we just near the lower end of the range?
You know, yeah, I'm with you. If that resolves lower, it's no good. I want to throw up Texas Pacific Land Group quick, TPL. So, JC, you remember this name?
Oh, yeah. This was one of our best winners last year.
Right. And there is so much information in the leaders always. So let's just look at what this former leader, this was the best stock in the energy.
This stock, everything was down. The stock, this was last summer when we were down near the lows and all the major indexes, the world was coming to an end. TPL was making new all-time highs. Throw the chart up, Spencer.
It's chart 8. So
TPL was making new all-time highs. Everything else was down, and this stock was making new all-time highs. You can see the breakout to new all-time highs happened in, which was pretty incredible. I mean, man, we broke out in August
last year.
In August. Yeah.
Okay. Yeah. So listen, this one's down now 50% from its highs that it made just in November. 50% drawdown. If the leaders aren't working, the whole space is suspect for me. You got to see the leaders continue to grind higher, and that's no longer the case for energy. So,
wasn't there something unique about this TPL? Like, aren't they weren't they doing something fancy? They weren't drilling or anything.
They're ultimately like a royalty company for the energy space. They make investments in land and stuff like that. They own energy assets, but they aren't touching oil.
Man, this thing down 50%. This is the best stock on earth.
Yeah. Yep.
Last in Q3 last year.
And that's important. That's why we're talking about it right now. We didn't just randomly pick a stock. We look to the leaders and the laggards for information always, and they're not telling us good things right now.
Well,
all right. Anything?
Yeah, we had a question off the top of the show, actually, from Yosul. Can you speak to the best names / basket for Japan, please? I want to coattail Uncle Warren.
For me, when it comes to that stuff, stick with what's working. It's really been the DXJ. I mean, that's really been the leader. Why are you going to mess around? The DXJ, how many ETFs? I mean, granted, now Germany and France and Denmark and the NASDAQ, they're all making new 52-week highs. But even before that, you already had the DXJ making new all-time highs. As far as any individual names, like, look at Mitsubishi. I mean, just kind of, it's got a nice base, but it hasn't resolved higher. I'd keep a close eye on that.
Sony's got the base. Sony is the one you want to be in. That's it. SONY. Because it's the right space, right, JC?
Yeah. And I mean, if this is the best stock you could think of, like what? Sony above 95?
Yeah, at least it looks like the other ones that have been working got a really clean level there, really well defined. Trend is now higher if we're above 95. I think this one's super fresh. You can get in this right here today. And I don't think there's a better vehicle for playing Japan because the rest of the stocks are things like Toyota or what do we got? Toyota, Mitsubishi, Nippon, which is a telecom, Mitsubishi Financial. That's a bank, fast retailing, KDDI. I mean, there's not.
Punch up slide 2 there, Spencer.
These names don't get me too excited. Also, what does this have to do with Uncle Warren? Is he making a bet on Japan?
He's been buying Japan. Like he traveled out there. Like he's making a bet on Japan for sure. I mean, even I don't watch the news, and even I knew that.
Yeah.
And then look at Toyota. I'm gonna throw it up right here. Just switch it to Toyota so you can see what this is doing. So Sony, we're looking at that, 95 level. If we're above that, it's not the end of the world. You look at Toyota, you had a consolidation going back to the 2007 highs. So you're looking at what? You're looking at a 15-year base that broke out after COVID, and now we're retesting those levels now. So call it, 138, 140. If we're above that and you want to be long, I don't hate it, right? Because that puts us above all that former resistance. Not terrible. Right? You want to look at you want to go to the chart report before we bring in Ian?
Yeah. And then Fonz in the chat is saying HMC.
That's Honda.
That's
so
Honda, right?
It's going to actually look a lot better than Toyota. Frankly, if you want to buy any of the traditional autos here, Honda does look the best. Honda looks by far better. Yeah. Look at Ford. Look at GM. You just showed Toyota. Honda.
You would be rather buying, and I know yesterday on yesterday's show, Todd Sohn said he'd rather be buying Honda than Toyota. I don't know.
Are you crazy?
What, long Honda against 24?
What do we do? Every day we come on here and we talk about what the patterns that we want to be buying look like. This is that. Did you forget? What's wrong with your short-term memory? These are the stocks that are working. We're buying the ones that look like this.
Yeah, when you zoom out, it looks messier. When you zoom in, it's cleaner. You're right. I'll give you that one. One.
It's even got the relative trend curling higher.
Yeah, you're right.
Checks all the boxes.
Hey, you're right. It happens.
You're right. You're right. Hey,
you're right. Strazza. You and Todd Sohn. You guys are actually. I'm with you guys.
Don't mess with me with the bases, JC.
I mean, they all look the same. Like you're trained at this point. Like there's so many that look like that.
Quick look at FSLR. We want to do one more. You want to do First Solar? We had there was a nice breakout in this space, in the solar space the other day. Let me find the stock.
Yeah,
First Solar has been the leader, right? JC, we could definitely speak to that. We've been riding this one. We've been long First Solar. But one came across my desk. Was it ENS?
It's the Solar Edge, the one that's got my attention. First Solar, it's nice base, probably heading towards 300. Those are those former highs. But as far as like a clean consolidation, that SEDG Solar Edge, I mean, that's the one for me. I'm looking for a breakout. Spencer, if you want to throw up the chart, let me just drop it in here real quick.
Oh, we just got long Array Technologies. That's it. ARRY. If you can grab that chart, Fonz, it was in 2 to 100.
Throw that Solar Edge chart quickly because that thing is nice, man. SEDG.
Look at that consolidation, dude. Like 3 years, going on 3 years now.
You know what's interesting about solar is that solar stocks are semiconductors, right?
Most of them. Most of them.
Is that how that works?
Unbeknownst to most, yes.
But they're not benefiting from the AI. They're like semis that are not benefiting from the AI. Is that what's going on?
No, a deep dive in this space right now would make sense. Maybe we'll do something like that because some of these things look really good and are completing the bases that we want to see. Something like CSIQ or Array, ARRY, and then other ones look pretty terrible, like Nova or Sunrun looks really bad. Yeah, so it's very bifurcated right now. If I could just shout out one, I was looking at the SoFi Alternative Energy ETF. I think it's ENRG. Yeah, SoFi Smart Energy. Eaton is in here. So this is a diversified industrial $65 billion stock. Huge company. Apparently doing things in the alternative energy space. Look at that chart, JC. ETN. You're not going to find many industrials that look this good these days. I think they pay a nice dividend. This is just it's a quality company. So,
yep.
All right, let's do the chart report real fast, and then we'll bring on Ian Culley.
Better be featured.
What?
I'm kidding. Let's go.
I didn't even hear what you said.
Go for it.
All right, here's yesterday's chart of the day. It is not from Steve Strazza. Sadly, it's from Charting Cycles.
What is this?
Looking at the Qs, looking at different moving averages. Dude, don't ask me.
Who drew this?
Charting Cycles drew this. Don't ask Patrick, right? The man who puts this together every day. Anything stick out to you guys?
Yeah, new chartists, if you're using a black background, lose it. Go with the white. It's not going to help you. You get less engagement too. The charts are ugly. Nobody wants to look at a black background.
These are always good. The
better for the eyes, though. Isn't it better for the eyes?
I don't care about your eyes.
Oh, clearly.
I like pretty charts.
All right. I always think Dietrich does these 100-day.
That's the one that I was going to talk about. It's really interesting. We're 100 days into the year. Is that what it is? And, when we're up this much, market's never been down. Was that what the situation is? Or 90% of the time it's up?
Did you know that 95% of the time that I oversleep on a Wednesday, the market's higher 52 weeks later?
Have you back tested that? How do you know?
Are you hating? Are you hating on this particular back test?
No, it's just in general. If you look at a long-term chart of the S&P, we shouldn't be shocked when we run these studies and say, "Oh, the market's up 95% of the time." You can flip a coin and check if the market's up.
Yeah, but the average is like 75%. So this is it's a higher probability. At the end of the day, this is just reiterates what we always talk about: asset prices trend. We know that. This is just another way to define it. When you're up 7%, 100 days in, it's going to continue to go up. Like, it's just another way to be like, yeah, there's a higher probability outcome that the asset prices are going to continue to trend in the direction that they're currently trending versus completely reversing, right? It's just another way to say that.
I'm just being a smartass. You know that. I love Ryan's stuff. We were just talking to Dietrich the other day. He is on vacation next week, but he'll be joining us the following week. So we'll talk all about these stats.
I like it. All
right. The chart report is a free, and I emphasize free, daily note compiling the best charts and trading wisdom from around the world of finance. Use the link or QR code on the screen. The link is in the description of the video on YouTube, right where it says the chart report, to subscribe to the chart report today and get the latest issue. We read it every day. Okay. It is 9:41. let's do a little what the FICC with Mr. Ian Culley, head of FICC at All-Star Charts.
What's happening, gentlemen?
What's up, man?
All right, let's kick this thing off. Ian, we were chatting last night. It was like 7:30, waiting for basketball to come on, and we're nerding out, complaining about how commodity stocks just don't look so good. This is what we do at night. This is what we do for fun. We were chatting last night, waiting for the Heat to come on, and we're both just like, man, I don't know. It doesn't look so great. And I feel for Ian because he does, all of our FICC stuff and then commodity stocks. And you get bummed out when the groups that you're covering or the assets that you're covering aren't trending higher. And I get that. I like bull markets too. They're more fun. But tell us why you and I kind of came to the conclusion that there's still hope for these groups. I'm talking about your energy stocks, your material stocks, metals and mining, and even commodities themselves. So,
well, they're still holding, just looking at EQRR. If you want to pull that chart up, Alfonso, I mean, it's still holding above a critical polarity zone.
So what is this? That's important. So this is like 40% energy, 40% financials. The idea here is that these stocks trend higher when interest rates are trending higher, right?
Absolutely. And as you pointed out earlier in the show, in the past few weeks, as rates have started to catch higher, these assets have not.
Yeah.
Which is really, really interesting. We talk about, copper versus gold breaking down to new lows, regional banks versus REITs catching lower, small caps relative to the S&P 500 catching lower. These are all things, all relative ratios that that should be catching higher in an environment where rates are rising, not happening. Now, on the absolute, I'm sorry.
Hold on. It's not just the banks or financials, right? Because if the banks or financials we're seeing selling pressure as rates rise, I get that. That would make sense to me, at least right now. But it's the other groups too, no? Like energy and materials are breaking down as rates rise.
Exactly. And that's really what has my attention. I think about rates constantly. Where are they going to go, right? And it's just been a sideways mess. Yeah. And maybe that's not a bad thing. Maybe it's just they continue to chop sideways. But if this rally in the S&P 500, if we're going to see a sustained rally at the index level, these assets, these stocks need to dig in at this potential support level and start catching higher.
Agree.
If you show a chart at FCX, this is yesterday bulls came in, supported higher prices, and we're still right at this critical level around 33 in FCX. So I'm keeping my eye on this one. I mean, if FCX continues to catch lower, that's a tough one for stock market bulls.
I mean, isn't it? Don't you have to kind of look at it at this point and say, if these stocks are making new lows as rates rally, best rally we've seen in rates in months, maybe all year, what's going to happen if rates reverse and start moving lower to these things?
That downtrend is most likely going to pick up.
Talk to me about levels for energy.
Yeah.
Talk to us about what?
What do you have for energy? Because we got some questions about Oxy today. Where's your head at? What levels are you watching?
Well, for XLE, it's around 75.
So you're giving it some cushion below those prior cycle highs then?
Yes, I'm giving it a little room.
Okay.
Got a trend line violation here earlier in the year.
Yeah, I don't love that.
I don't love that either, but still got to give it the benefit of the doubt, right? As long as it's above that 75 level. For crude, we're down around 65, the lower bounds of its year-to-date range. And, it's, just chopping in the middle of that range right now, trying to get back above 74, trying to get back above those prior cycle highs from 2018.
Throw up chart 62, because that's what Ian's talking about. That's really the big line in the sand. That's why these things are so vulnerable right here. We talk about these. Chart 62. We talk about these 2018 highs all the time. Ian, you could talk to me about them for interest rates. We got prior cycle highs in the dollar. I think that's more like 2016.
Mm-hmm. Yeah, it doesn't matter what asset class we're looking at. Those 2018 highs, or when it comes to bonds, 2018 lows, are still in focus for a lot of these groups. Yeah, it's a critical level right now. It's like, do or die for some of these names.
And how about gold? Let's talk about gold. Like we were early again. This thing is still in a range and it's doing what things do when they're in a range. Do I have that right?
Yeah, absolutely. But when it comes to gold, precious metals in general catching lower over the past couple weeks.
With a stronger dollar,
rising rates. I mean, what would we? That's to be expected.
Yeah.
But now it's those 2011 highs around, the prior cycle from the last commodity super cycle around 1924 for gold futures. That's the level, and it's approaching fast.
Guys, don't look now, because I remember a time not so long ago when we were pointing to this chart of Dixie and saying, looks like the trend has turned, but this is a little sketchy because we're not getting oversold. Why won't this thing get oversold? And we didn't love it. We wanted that oversold reading. We never got it. Look at Dixie momentum right now. We're about to get an overbought reading.
Yeah, that was a huge heads up.
So these are going to be some challenging trends in the back half of the year, it seems, whether it's rates. They've already been a challenge, and now it seems like the dollar is not ready to go away either. So maybe we'll have some intermarket headwinds as the year progresses.
Potentially. And I'm having a difficult time getting a read on the bond market right now with, all the fear regarding U.S. treasuries. So I don't know if rates are rising simply because nobody wants to buy bonds. Right? I mean, they're a risk asset right now. Like no one wants to buy bonds.
Explain what you mean by that. You said that in the chat the other day. I was like, huh?
Yeah, I mean,
treasuries are a risk asset. In what sense? Is it because of the long duration? Is it if you say debt ceiling, I'm walking out.
No, not the debt ceiling. It's, think last year the 60-40 portfolio got absolutely smashed.
Yeah.
Individual investors really felt that this past spring, those risk-free treasuries became risk assets for regional banks that had to dump them to raise cash.
Spencer, throw slide 2 in. Throw slide 2 in there, Spencer.
It's a good point. And Ian, too, I think there might have been like capitulation forces at work. Like we were just talking about with Phil. I think maybe some people finally said, forget it with their bonds and just got out of them last year. And it might be a hard, sell to get them right back in this soon.
Right.
Here's what I'm watching. You want to talk about why bonds are struggling. It may be because nobody wants to buy them. It might be because of the debt ceiling or the war or whatever. What I see is that this is where the 10-year yield peaked in 14. It's where the 10-year yield peaked again in 18. And then we finally broke out above that. And then we're consolidating above those levels. So if I had to guess here, right? We don't know what the market's going to do. I don't know. Warren Buffett doesn't know. Ian certainly doesn't know. Strazza doesn't know. To me, this doesn't look like a top in yields. It looks like a healthy, well-deserved digestion after a historic move off of the lows, holding above those former highs. And if rates get going again, are you going to bet that oil and energy stocks are not?
No, absolutely not. In that environment, crude oil is back up towards 100. XLE's, catching higher. I would imagine, and see, this is where it gets a bit tricky. So if rates continue to rise, then does that mean stronger dollar?
Not necessarily. Probably, but not necessarily.
That's the thing, that the relationship that's been in place for the past year is going to have to decouple. That strong positive correlation between dollar and rates is going to have to break down if we're going to see a rotation into some of these industrial areas like the metals.
Yeah, but it's been a scenario where bond selling has been a trigger for stock selling. So as bonds are selling off and interest rates are going up, the dollar has been that safe haven as money has rotated out of those risk assets. So is it that the dollar and interest rates are positively correlated, or is the fact that interest rates have been going up, bonds are getting killed, stocks get that sympathy selling, and the dollar has been a safe haven because of that? So more like dollar strength is a is a function, multiple dominoes down the road of rising interest rates.
That's I like that. That's I can see that. I guess it then would come down to whether or not this potential rise in yields, like what's the rate of change?
Right.
Like, do they rip higher like they did last year or the year before, or is it more of a
because rates just stopped going up at the end of Q3, right? Or in October, they stopped going up. And guess what? Stocks love it, right? They're not going down. They're not going up. They're just kind of bouncing around sideways, and stocks love it. We're getting historic returns quarter after quarter, 7.5% in Q4 last year, 7.5% in Q1 this year, another 2-3% in this. In bear markets, stocks don't go up every quarter, right? But at the end of the day, what's driving the stock market? I think the lack of bond market volatility certainly helps.
Yeah, absolutely. Absolutely.
Are we going to keep Ian around for a recess? We should keep him around.
Yep. Yeah, let's hang out.
Yeah, you hang out. You hang out.
We're not going to talk the tape today.
Yeah, I mean, we got some time. You want to talk tape? I think
talk the tape.
I think that's not a bad idea.
Hit it.
It is 9:53, so markets have been open for 23 minutes. Let's talk some tape. Where's my bumper? I can't find it. I can't find my bumper. What the hell?
Hit it.
I'm trying.
Crying out loud, Spencer.
Seriously.
Let's talk the tape. Come on.
Dow up 200, Nasdaq up another percent. For the guys again, if in case you didn't realize, that's the trend, so it's normal. We call that around here.
Yeah, so it's going to be short and sweet today. Really, the main idea here is that the performance gap between the best and worst stocks continues to widen. It's already been huge. If you look at year-to-date returns or returns, since the October lows, there's just a huge gap between, the winners, which is your tech and your growth stuff, and then the energy and cyclicals and value stuff on the lower end. So that relationship is only accelerating in favor of growth or tech, and not in favor of things like energy. JC, you just showed the ratio chart before. So today, again, equal weight tech is just ripping, guys. And that's exactly what we want to see. We don't want to sit here and say, oh, it's just the mega caps dragging tech higher. And it's not. If you look at RYT, gapping higher today, making new multi-month highs, it's got new 52-week highs very much in view, about less than 2% away from new 52-week highs. So tech continues to get it done. When I look at an equal weight basis in my ETFs, my Morningstar ETFs, tech up over 1%, consumer cyclicals up 70 basis points. Then you have materials, industrials, and communications coming in with nice gains on the day as well. Then rounding it out are the defensives, which we want to see. Consumer defensives basically flat, real estate flat, utilities down about 50 basis points. So we are getting that offensive bid. That is what we want to see. I want to see groups like ARK start to participate. I don't like the price action from ARK yesterday. I loved what Todd was saying about how they use the ARK funds as like a barometer for what the most speculative growth stocks are doing. We do the same thing. ARK needs to start participating here. Yesterday's candle was no good, up about 1% today. But more work to do. It's really, again, the large cap techs. If you look at something like SMH, the semiconductors just keep cruising higher. Software making new 52-week highs today. That's a big one, gapping above those August highs. We use IGV for cap-weighted software. So everything continues to look really good in the growth space and not so great in the value space. I'll tell you, if the Dow and financials and energy and small caps can get their act together and start trending higher, look out, because then everything will be working. We'll really be cooking with gas then. So
I want to circle back to what you just talked about, equally weighted technology. For those of you who think it's just 5 stocks that are going up,
this is about.
I would call your 3rd grade math teacher and tell her or him that they did a terrible job of teaching you basic arithmetic, because we know, we have the data. It is not 5 stocks. And one great way to show that is the fact that the equally weighted technology index, so not 5 stocks, but equally weighted, is pushing up against new 52-week highs. And by the way, Spencer, the other day you were like, I don't understand these equally weighted indexes. What's the point? Remember? And I was explaining to you that we're not necessarily trading these things. We're not investing in them. We're using that as information and exhibit A as to the value that they bring to the table.
And JC, these tech indexes and growth indexes were on the ropes just earlier this week. We had a couple big down days. It looked like these bases were going to fail and we were going to fall back into the box. Instead, on the NVIDIA report, these things are just ripping, and the follow through of these bases looks great. And now we got more and more resolving higher just the past few days. Like I said, software today is a huge one. IGV, RYT, the chart you just showed, that's about to go. So that list of completed bases, which equals new uptrends, continues to grow in favor of the bulls.
All right, let's do some recess. I got something.
I got something too.
What is it that the heat sucks?
Spencer.
All right, JC, you want to go or you want me to go?
You go quick and then I'll go.
All right. I have to wish a happy birthday is in order. Happy birthday, JC. Who or what am I wishing a happy birthday to today? This is a test.
May 26. I don't know.
It's gonna be like the Dow or something weird, right?
And Strazza gets the cookie. JC, I'm very disappointed in you.
May 26th is
Yes,
what? What day is today?
May 26, 1896. On this day, the very first iteration of the Dow Jones Industrial Average was published. And bonus points. So there's 12 members. Bonus points if you can name the only member of that original index that is still
GE.
No. Listen. That is the only member of the original index that is still a standalone publicly traded company. GE is not the answer because GE was not.
Anybody want to go? Anybody want to try this before I school you all?
Is it ExxonMobil because it owned one of those energy stocks? No.
U.S. Steel, baby. U.S. Steel.
U.S. Steel.
So that's also a great guess, and that's also wrong.
Really?
Yes, the original index. So GE and U.S. Steel were in the very first iteration of the Dow that had 30 members, right? But that wasn't in the 20s. Originally, it was 12 members. They didn't expand it to 30 to the 1920s later on. So in the original index, the 12-member index, there was one company that is still a standalone. Someone said NVIDIA.
It's going to be some material stock. It's going to be some strange material stock.
It was NVIDIA. How do you know? No, it was it was called then the National Lead Company. NL is the ticker.
Wow.
They're now called the NL Company, and they're still public.
They're dropping heat. Mitchell is talking about why not RYT if it's less volatile, less risk. It doesn't trade, Mitchell. There's no volume. These things don't trade at all. We just use them for information. So that's as good of an answer as that you're ever going to get. It doesn't trade, so you can't buy it even if you wanted to. I mean, if you want to buy a few thousand shares, you could, but it's not anything that I would ever touch. You're a financial advisor, you can't touch it.
I think the chat was giving you a hard time yesterday about loving the Dow so much. If there's a reason to love the Dow more than the other indexes, it's for the simple fact that we have more price history there and therefore can do more work with it, right? And we can go back further in history.
First of all, overlay the S&P 500 and the Dow going back 100 years. Right. They moved together.
Yeah. So we don't have the S&P 500 for half a century, right? We use the Dow because it's effectively the same.
Spencer, quick lesson for Strazza. Ready? Throw up slide 4 there quickly. Oh, Strazza calls me the other day and he's like, "Oh, is that like a Côte du Rhône?" Right? And I'm like, "No, Côte du Rhône." Right. So here on the left, you're looking at a chart of France. On the right, you're looking at Rhône. So when it's really skinny up at the top, that is the north of Rhône. That's going to be Syrah primarily, and then in the south. You're going to get those blends. So throw up slide 5 quickly. So I just pointed out a few that if you like Côte du Rhône, which there's nothing wrong with Côte du Rhône, if you want to spend a little bit more money, it's not that expensive, a little bit more money.
On. JC calls me the other day. Why are you drinking that trash wine? Don't I pay you enough?
What wine were you drinking? I never said that.
Côte du Rhône.
Listen, there's nothing wrong with Côte du Rhône, but if you like that, so in the north, you're looking at Syrah-dominated wine. In the south, you're looking at Grenache dominated. So if you like Côte du Rhône, I highly recommend Vinsobres. I highlighted them here with arrows. Gigondas. I like Vaccares. And then in the gold arrow is Châteauneuf-du-Pape. So that's kind of like the granddaddy of them all down in the south of Rome, a little Châteauneuf-du-Pape. That'll get you done. But you don't have to spend that much money on a Châteauneuf-du-Pape. I like a Gigondas all day to the point where I might even get the Gigondas over the Châteauneuf-du-Pape. How about that?
That's the Chateauneuf. That's that one with the F.
Yeah.
Nuff.
Shut the noof. Because you know why? Because back in the day, the Pope used to go on vacation there. That's where like the Pope's like his summer house was in. That's why it's called Shut the Noof to Pop.
Got it.
Fun fact.
All right. Anyone have anything else? Strazza, Ian?
That's it. That's all I got.
I can't get over Kimmy shorting NVIDIA during that after hours pop.
Well, she does though. That's what
unreal.
All right.
She does. She mean reverts. That's her trade.
Kimmy's trading right now, actually. You might go hop in there after we're done. So that's our show for the day. Thanks to our guest, Kimmy Sokoloff. Thanks to Ian Culley. Thanks to Dr. Phil Pearlman. If you were watching on YouTube, hit the like button. We'd appreciate that. Thanks to all the comments we get in the chat. The chat is awesome. Who just said they love the show? Sazo Pro says, I love the show. Thank you very much, Sazo Pro. We appreciate that. That's a wrap for us now, but we have more shows coming later on in the day. We got What the Thick with Ian Culley at 11:30, and then the Hot Corner with Strazza at 1. Have a great rest of your day. Happy Memorial Day weekend, everyone. It is the start of summer. I'm in a great mood. Happy trading. We'll see you later.
Go Heat. Go Heat.
Bye, buddy.
Run it. I can't take no loss. I don't even know what it costs.